Hello and welcome to 3.0 TV. I am Nosedive and Happy New Year to all the viewers. So, cryptocurrencies continue to suffer from the prolonged winter season, and there is a big concern on the Bitcoin mining hash rate. So, we have a reason and we will tell you why. The recent winter has sent shivers to the spine of related industries. Bitcoin mining activities too suffered heavily in the recent times. That's what the news reports have suggested. The reason being the chilly weather conditions observed in the United States by the December end. Yes, the hash rate of Bitcoin miners, the key parameter to a certain success, witnessed a sharp drop. Essentially, a Bitcoin network accumulates hash rate per second from the miners that are online. So, every guess made by a miner towards solving the next block determines this hash rate. So this also helps validate the level of security and mining difficulties of the blockchain network. Recently, the Bitcoin mining hash rate witnessed a sharp drop as the storm tore through the multiple states of the United States. Grids across the region came under immense pressure as freezing cold temperature led to the increase in demand by the residents to heat their homes. To ensure adequate energy availability, some of the mining operations had to wind down. Since number of Bitcoin miners decided to pause their operations to freeze some of the energy, they had to take a hit on the hash rate contributed by the country. There has been an increase in the hash rate since then, but market participants believe the worst is not yet over. By Christmas Day, the global hash rate tanked almost 40%, dropping from a previous day peak of 276 exahashes per second to 175 exahashes per second. On the same day, the hash rate increased by 39%, bringing it back to the roughly around 244 EHS. Since then, the hash rate has continued to wobble day in day out and now has dropped back to the 212 EHS levels once more. This shows that while miners have turned some of their machines back on, they may be shutting them down once more as the extremely cold weather persists. Energy prices, debt burden, and Bitcoin price declines continue to influence the fortunes of the mining industries. In November, hash rate declined by 13.1% from all-time highs. However, of the major hash rate declines since 2016, that's still relatively small compared to the handful of down periods over 15% during that time. As of now, the hash rate is around 250 EHS and down 7.84% from its all-time high of approximately 276 EHS. This is the largest downward difficulty change observed since July 2021, when the Chinese mining ban caused a series of downward difficulties adjustments. After a 452% rise in value on its November 2021 peak of $19.1 billion, the market wiped out 90% of its value in less than a year. In an environment of rising global energy prices and rising interest rate, the mining industry will continue to feel the heat. Analysts suggest that the miners may continue to sustain with the squeezing market conditions, and they will have to be prepared for the worst of the downward of public miner market capitalizations and hash rate prices, which is actually nothing but miner revenue per terahash. So yet the activities will continue regardless of tough times, because every 10 minutes the block will be mined. That's all there is in this special story. This is Manoj signing off, but keep watching 3.0 TV for more such interesting updates. Thank you.